guys, welcome to ARX. This is our weekly outlook. We're gonna break the market down from monthly to lower time frame and see what you can expect for the week ahead. So here on GBPUSD on the monthly time frame, what you can see here is the main breakout structure as bearish. Candles close below. Also you have this one as well. Perfect. There we go. So that's what you need on the monthly. I don't check for anything else on the monthly time frame. Okay, I just want to see what is the probability of the direction. Also you can see you have this trend line liquidity as well. It's been respected the monthly time frame, so these levels are strong. So if you go to the weekly time frame, what you can see on the weekly time frame, you can see the market swept that liquidity, then break this structure here, there we go, left some liquidity before the confirmation, so you have that liquidity over there, and then taps into the weekly rejection block. As you can see, nice reaction. If you go to the line chart, you can see the market just confirm as a breakout structure to the downside. So that means you have monthly and weekly. Let's put just that. Monthly and weekly a bearish market, right? So it's just very precise. This tap over there, perfect. So what else you can see? You need to looking for PMIs on the weekly time frame. That's what I'm doing. So you can see all this rejection block over there. This all large one, so we'll put that as a line just there as a rejection block of the weekly. Perfect. Now you go to the daily, and what you can see on the daily, let's put this straight just there, just to make sense. Perfect. So what you can see on the daily time frame is you need to find which level the market are attracted to, right? So you have a few levels here. That's the market being attracted. So let's put this just, I'm gonna refine this one till here. Perfect. So you can write this as a weekly rejection block. The same here, but just for us to know where the levels coming from. Perfect. So on the weekly time frame, on the daily time frame, what you can see is the market left a few liquidities to be consumed. As you can see here, this equal lows. Perfect. So that's a pool of liquidity that the market is being attracted to. So you already have a target. So what I'm gonna do is I'm gonna put that line so you can see them in all time frames. Perfect. So now what you can see is as the market being respect that level, that the weekly level, break structure, you can just turn this into here because that's on the daily, that's where the structure means break. So this internal range liquidity you can just put there. So you're gonna start clean the charts. Perfect, to make sense, right? So on the daily, you can see even on the daily time frame, the market just break structure just there. Can you see? Okay, perfect. So monthly bearish, weekly bearish, daily bearish. So now you can see the market create these equal lows, perfect. But before that, you can see the market swept that liquidity. That's a big stop hunt just there, and break structure just here. Perfect. And then you can see the market push, made a few liquidities more. So I'm sure a lot of people are waiting for this level to play out, this order block, and that's what the market showed swept at level. When it's very like obvious, is normally is a trap. So what you have now, you have this range and now this one. So everything inside should be the internal range liquidity. So we'll take this as internal range liquidity and in future targets. And then can, if the market swept that level and respect that daily rejection block, so we'll keep the bullish momentum. Okay, so that's gonna be the decision level. You're gonna mark this as a caution. So you need to take careful of this level. So because the market can respond from this as the market build a daily order block and also a liquidity below. Right, so that's the levels you are looking for a reaction, but as the monthly, weekly, and daily are bearish, you expect these levels being break.
I'm not quite sure how to help you with that.
He expected the market break this down and swap a few stop losses. So as you have a direction of weekly, monthly, weekly, and daily, now we go to the 4 hours and let's see what's going on. Let's put this right just here, just there. Perfect. On the 4 hour, you can see exactly the same. So you can see the market swept this liquidity, then break structure to the downside just here, then the market taps into, you have 2 PMIs, you have an order block and also a rejection block and order block. So the market being respected level and just melt to the downside. So perfect. You have also already monthly, weekly, daily, and 4 hour bearish. So, and the question is, how are you gonna trade from these levels now? So first thing first, you need to see the main break of structure. So you already know all these time frames, monthly, weekly, daily, 4 hour are bearish. So you need to find the range, because for be able to trade, you need to see where's the market's going. So, and you can see here the market swept this liquidity and break this structure. So you have a range between this low and this high. Perfect. So all of this inside is internal range liquidity, and that, as you can see, that's what the market's been doing, is take out all of this internal range liquidity. Also you have these lows here to be consumed as well. That's perfect. So you can put this under liquidity. So now you already have the 4 hour bearish confirmation as well, also here. So you can see another break of structure just there. So perfect. So now let's go to the 1 hour and see what's going on. Let's take this level out just for a few moments for us to be able to read this price action. So now what you can see here is the market before drop, swap a few liquidities. You can see that level, swap that level, fail, great. So now these highs here is being taken out, then break structure to the downside. Okay, so 1 hour is bearish as well. So we've been monthly, weekly, daily, 4 hour, 1 hour bearish. Okay, so now let's mark this. Okay, so now what you need to see here to be able to trade. So now you can count this as a trend line liquidity, as you can see here. A trend line, perfect. So you have a few levels. You have this, you're gonna take this as an internal range liquidity. What you need is market open, wait for the market break structure to the upside, because for us to confirm the range and also for us to be able to keep selling in the retracement. So, and you know the retracement start when the market breaks structure to the upside. So let's see, the market now open is going to create a break of structure. So create a break of structure, perfect. You know the pullback started from the drop. So at this high is going to hold. You don't know. How we know is as soon as the market show again the structure break to the downside, so you already know the pullback is over, and start again the range expansion. So it's going to start bearish momentum again. So and from that confirmation, that you're going to looking for sells. So this is what you're looking for on the GBPUSD. And now I want to show you what happened on gold and where you take a trade. So gold was a good trade. So he basically gonna show you, take a few pounds on them. Alright, so you use a break-even protocol because the market are bullish, you are selling. So you go against the market, but you're able to catch a nice trade. And he was waiting for the confirmation to keep buying, but yeah, the confirmation was there, but the market doesn't tap on our entry to buy it. But he was able to catch a few pips on them. So in what I see here was was on the 50 minutes time frame. On the 50 minutes time frame, what I saw was so you have bearish market, this structure being break to the downside, perfect. It built a few liquidity, was expecting a big move, to be honest, but what I saw was so the market swept that liquidity and break structure to the downside, because most people, as they know the market is bullish, is trying to buy from here, from this order block. And you can see as soon as the market taps there, the reaction they give. So most people get in and get stopped out. So I saw that level happen. I was thinking, so that's is gonna be the level that can take out the lows before the before the continuation of the bullish market. So what I saw, so I need to see a liquidity build, and I saw this level here. I was thinking, so you have liquidity, you have the market break structure to the downside as well. This was a break of structure. Let's put this. You have the break of structure to the downside, confirm with this one as well. So I was thinking, let's go one time frame higher. I go one time frame higher, and I noticed that a rejection block here. So I'm gonna take a trade from that level and see what happened. So you take a trade from this level, 58, 36, 58. With the spread, I take 36, 58, 48. Yeah, it's just the spread, as you can see. 36, 58, 48. This was 36. This line was 36, 58, 85. So you have like a few pips of spread, and I take the trade just there. I was thinking to target that level, and that's where the market show us the reversal, and as soon as I saw, okay, so the market drops, confirm another breakout structure just here. Great. I saw that level, I think, okay, so the market should be swept at level, and that's where I'm gonna bank more profits. But the market doesn't do that, and what they do was, okay, they swap liquidity just here. They swap liquidity just there, then break structure to the upside. And as we are on the bullish market, of course, every breakout structure to the upside should be taken into consideration. Then I will see, okay, so I gotta bank my profits, I protect myself, great. Now I need the high time frame confirmation to be able to take the trade to the upside. So I've been on 1 hour, and I was thinking, okay, 1 hour I don't have anything yet. I go to the 4 hour, I saw this level here. I think, okay, he have liquidity just built there, so it should taps into here before push high. So, and that actually does not happen. So I was waiting them for the market to taps into here to catch this move, but that's not happening. That's okay. So yeah, gold now are on the highs again. Let's see what's gonna bring to gold next week. And I'm not take any direction on gold right now. I need to see the markets play out first to be able to break it down. So yeah, this is our weekly outlook. I hope you're enjoying, and see you inside the Discord.
Don't forget to like and subscribe.